Hey everyone, I hope you're all doing well. My name is Chris and I regularly post video on stock investment in this channel. So last month I did a portfolio reveal and I thought it would be an interesting idea to share how the portfolio has been doing with the strong recovery of growth stock that we have been seeing since last month. So this portfolio is up 14,500 euro from May 18 to June 18, or 17.4%. Compare that to the 6.3% for Nasdaq 100 and 0.9% for S&P 500. So there's not much portfolio analysis tool that Degiro provide, and if you remember from last video, I used Wallmine to do some analysis on the portfolio. But it's not straightforward to import the data from Degiro to Wallmine. So in this video, I'll show you a different way to do the portfolio analysis using Google Spreadsheet instead. So if you're looking for an app to track multiple portfolio, feel free to check out this video. It will show you the 3 different apps that you could use to track different portfolios. If you're considering to sign up for Degiro, feel free to use the link down below and get 20 euro for free. So back to the topic, let's check out the portfolio. So this part is recorded before the market closed on Friday on June 18. So the portfolio is up 500 euro for the day and it has an overall 28,800 euro or 41% overall return. So just quickly sorting here, the stock that is down are semiconductor stocks like Taiwan Semiconductor and Skyworks Solution, gaming companies like Activision Blizzard and Zynga, and the other one is retail companies like Stitch Fix and Starbucks. So the stocks that are up the most for the day are not surprisingly growth stocks, but these are just daily gains. What's more interesting would be to check out the one that grow the most from the 1 month period, and then is there any change to the portfolio allocation. So to do this kind of analysis, you could export your portfolio data from Degiro, and I'll select the date for the last month, which is 18th of May, and then I'll export an Excel file, and I'll do the same for June 18th. So this will export the list of stocks you have in your portfolio, the quantities for all of them, and then the market value as of the closing price for the selected date. So one thing to note though, if you export the portfolio data, the market close price is only the price as of the previous day. So if you're expecting the close price from today, you'll only be able to see it on the following day. To do the analysis, you can upload the file to Google Drive and then open it with Google Spreadsheet. So as you can see here, you have the list of stocks and the market value in your account currency, which is euro in this case. And I can easily then compare the market value for the different positions that I have and then compare that in the 2 dates that I have exported. First, let's look at the monthly performance on the portfolio and compare it to the standard market index like the S&P 500 and Nasdaq 100. So the good thing with Google Spreadsheet is you can use Google Finance function to fetch historical stock price data for a specific date. So as an example here, I use Google Finance function to find the Nasdaq 100 index value on the closing date for 18th of May and then compare that to the June of 18, and then I can simply subtract the difference and then get the return for the period. And I can do the same for S&P 500 and also for the portfolio. So for the portfolio, I can simply subtract the portfolio value on June 18 minus the one on May and then just calculate the return. I can do this because I didn't deposit or withdraw any money from this portfolio. So in case I do, I would need to calculate the return differently using the time-weighted return instead, but that would be a topic for a different video. So let's move on to a more interesting insights. So the top 10 stocks with the highest gain in this portfolio, so to no one's surprise, are mostly high growth stocks. So we have been seeing rotation from value back to growth. This is partly because the bond yield is down, and also the supply chain issue and the inflation data are not as bad as initially expected. These are just short-term market movement. If you holding on to high quality companies, you shouldn't need to worry as much. So one thing I would like to highlight, check out the market caps of the stocks that you have in your portfolio. Companies with smaller market capital tends to grow much higher, but they are more risky as well. So let's say Amazon has a market capitalization of 1.7 trillion. It would be more likely for a small company like Stitch Fix that has 6 billion valuation to grow, let's say 5 times in the next few years compared to Amazon, because how big Amazon already is. At the same time, the failure rate for a smaller cap company is also much higher. So all I'm saying is it's good to have balance on large caps and small caps in your portfolio, and the composition would largely impact how volatile your portfolio would be. The small caps company in this list are Stitch Fix, Appian, and Lemonade, and they're up by a significant amount since last month. But if you look at the 52 weeks high and the 52 weeks low for these stocks, they have a very wide range. And for this kind of companies, they tend to be more volatile because they are still in the hyper growth mode. So it's good to know the business really well, so that would help you to hold on to them and even add more allocation in the downturn period. So the next one in this list are two companies that produce electric vehicle from China, which is XPeng and NIO. So XPeng was up after they announced the total delivery for May, which is up 10% from the previous month and up more than 400% from the previous year. So in terms of number, they delivered 5,886 vehicles on May, and that is relatively small compared to Tesla, but they are still a very young company. So their financial actually has improved a lot. They have grown their revenue triple digit compared to last year, and their profit margin has improved as well to 11% compared that to the minus 4.8% last year. So as for NIO, they are gaining market share, especially for SUV electric vehicle in China. So they have 23 market share compared to the 17% that of Tesla. So in terms of valuation, they are priced in a similar multiple in terms of forward price to sales ratio. But compared to Tesla, NIO and XPeng are a much younger company and less proven. So the share price for this company could easily drop if they miss their target, but if they can grow consistently, they would grow into the valuation and eventually will become profitable. So notable large companies to highlight from this list are Nvidia and Shopify. So Nvidia will have a 4-to-1 stock split next month, effective July 20th. So a stock split doesn't really change the company valuation, but usually retail investors get excited over this. It's true that the stock will be more accessible for small retail investors, especially those that don't use platforms that support fractional shares like Degiro. But from past experience, usually the share price will cool down after the split. So the second company, Shopify, announced that their mobile payment called ShopPay is coming to Instagram, Facebook, and Google this year. And that is exciting news because the mobile payment will be available to more than 1 million merchants across this platform. So the next one here is the list of stock with the lowest gain in the last month. So they are still up by a small percentage point, so not much really to discuss here. So there are a few interesting companies to highlight from this list. The first one is Disney. So Disney Plus growth from their last earnings fell short on expectation, but their theme park reopening could be a big catalyst for them because historically, the theme park has been the largest revenue source for Disney. So the other company that would benefit from the lifted COVID restriction are MasterCard, which benefit a lot from cross-border payment generated by international travel. So the other company is Starbucks, which has started to reopen their store, especially in the US. So it would be interesting to follow how these three companies would do in the last 2 quarters of this year, because we expect more and more restriction would be lifted. The other thing that you can easily calculate using the exported portfolio data from Degiro is the allocation for each stocks that you have in your portfolio. So here's the stock with the largest allocation in my portfolio. So the first one is Enphase. It's a company that design and market microinverter used in solar panel. And the second one is Microsoft, that you probably already know. The third one is Stitch Fix. It's a company providing clothing service with the assistance of machine learning. So the fourth one is another famous cybersecurity company, CrowdStrike. And the last one is Shopify, a Canadian e-commerce platform. So looking at the list here, there are a good mix of companies from very large market cap to very small one. So there are minor changes on allocation compared to the previous month, because shares like Enphase, CrowdStrike, and Shopify have grown more than the others. Thinking about allocation in the long term, I would be fine to let this company grow and have more allocation in this portfolio. In my opinion, having a single stock with 10 to 15% in your portfolio, it's fine as long as you have a very high conviction on them. At the end of the day, it's always a personal decision that everyone needs to make, because everyone's situation is different, and at the end of the day, you would want to have a portfolio allocation that would allow you to sleep well at night. If you think this is helpful, consider to like the video and subscribe to the channel, because this would help others to find this video easier. If you consider to open a new account with Degiro, feel free to use the link down below and get €20 for free. So that's all from me, and see you in the next video.